Hello? So everyone maybe head towards your seats. I know it's almost there, almost there. Really appreciate your patience, and particularly those of you who are actually here. And I know folks will continue streaming in, and that's how it is, and we'll welcome them in. And those who can't stream in can watch the streaming online, so it'll work fine that way too. We have a very interesting session at the very end. Well, at least we hope it's interesting. Responsible client choices in finance. Whose responsibility is it?
The gong.
It's a very sonorous, very nice sound. Anyway, so the idea of this is that client protection and client choice are something that requires balance. And you know, on the one hand, too much client protection might actually lead to limiting client agency. On the other hand, too much client choice might lead to some clients making bad choices or wrong choices, and could certainly lead to serious negative consequences. So we wanted to really explore this dilemma between the two opposite poles, because they're both important. And what we have done is we've invited two teams of really eminent speakers, whom I'll introduce as they come up. And each was assigned their guiding philosophy, either the philosophy of client choice or the philosophy of client protection. And they'll describe the philosophy in more detail in their opening statements. What we have asked is that they stay true to that philosophy. We were not looking for consensus. We're not looking for agreement. This is meant to be a debate. And like the best debates, the idea is to highlight the difficult decisions that have to be made by any stakeholder, whether you be an institution, provider institution, an investor, a regulator, or another stakeholder. That choice always has to be made depending on what you're looking at. And in a way, this is theater. The particular philosophies aren't necessarily the philosophies that the eminent individuals subscribe to, and certainly not necessarily the philosophies of their institutions. We specifically asked them to say, you're meant to represent this philosophy and do the best you can. But like the best of theater, it should inform. So the way we're going to run this is each team will be given an opening statement, and then they will pose a question to the opposing team that the opposing team will answer. After that, we'll go into two different dilemmas that I'll pose to the teams and ask them to deal with those dilemmas. And after that, I'll turn to you, the audience, and see if you can pose a dilemma for each team to respond to. And so take the time to think about it well, because I'm going to ask for several and choose one. And at each round, we're going to have a vote, an audience vote on which team do you feel is winning. And at the end, we'll take an overall vote. So without further ado, I would like to move to team client choice. And I would like to welcome Mayada, El-Zoghbi from Center for Financial Inclusion on the stage, and also Tim Ogden from Financial Access Initiative on the stage. And you have 7 minutes, please.
Oh, I thought they had to.
No, they'll come up when it's their turn.
Huh, that's no fair. I prepared this whole thing to directly challenge them. Good afternoon, everybody. Thanks for taking a little bit of time for this. I want you to start off by thinking about the dawn of the modern microcredit movement, roughly 40 years ago. Who thinks that regulators at the time, if someone had come to them and said, you know, I think it's a really great idea to get a bunch of people with practically no experience in banking industry to go to the poorest people in your country and loan them money at really high interest rates. That's going to be great, right? Right? We all know the answer to that question. The only reason that the modern microcredit movement exists is because it wasn't strangled in the crib by regulators who knew that they knew better than the clients. They took a light touch. They let clients choose, and we're all here today because of that. Now, beyond that, keep in mind that even those regulators who took a light touch, even those founders of microcredit, were wrong. It took us 30 years after those dawning movements of the modern microcredit movement to figure out what was really happening, to figure out how rich the financial lives of the customers they were serving were. It was only after 30 years that we started paying attention to things like informal savings groups and informal remittance networks and the deep embeddedness of the financial lives of families with each other and with people in their community. The rhetoric of microcredit at the beginning was, we're offering credit to poor people who have no access to credit, which of course was entirely false. Even that rhetoric that acknowledged that the poor often were already borrowing, it was either microcredit or those evil loan sharks, and we're going to put those guys out of business. 30 years later, we realized there was a whole lot more credit, and we didn't put the loan sharks out of business. If the regulators had started thinking they understood the situation, where would we be? If they had started banning from the beginning, where would we be? But the problem goes even deeper than that. The products that we created in the original microcredit, it was only 30 years later that we figured out that the people weren't even using the products in the way we thought that we were using them. That the standard microcredit contract was terrible for business investment. People were using it to manage volatility, to manage liquidity. Heavy-handed regulation would have not allowed us to develop and innovate around products that started to actually meet client needs. But it even is worse than that. Because even if in theory you believe that there are regulators out there who are all-knowing, benevolent, and wise, and understand exactly what's happening in the financial lives of some of the poorest peoples in their country, how are the regulators going to hire those people? Most regulators are severely capacity constrained. They don't have the budgets to hire these mythical, all-knowing and wise servants. And even if they did, they don't have the capacity to provide those people with the real-time data necessary to substitute their judgment for those of customers. Well, let's be honest. I substitute my judgment for someone else's all the time. It's just my 11-year-old son. I don't pretend to substitute my judgment for adults who I don't know and am never going even to meet. It's a serious question to decide that we know better than someone else. And most of our lives, we don't presume that we know better than other people. Why should we start from a perspective of we know better than poor people? Every time we've started programs based on the idea that we know better than them, we get bad outcomes. Of course, if we do start putting a more heavy-handed regulatory framework in place, starts banning products, starts limiting what microfinance institutions do, we also know exactly what's going to happen. That is going to raise the cost of doing business for MFIs. MFIs who are not all that profitable to begin with, many of whom still rely on subsidy. So what is going to happen if we raise the price of service? Who's going to pay that cost? The customers. They're going to pay that cost either by raising the price of the products that we offer them, or by MFIs pulling back from serving the poorest and relinquishing those people to the informal market, shutting them out of higher quality products. So I'll close there and just ask the team two, if you are going to start banning products, how are you going to stop the informal market from filling in with worse products, serving those customers' needs? Thank you.
Thank you, Tim, for that lovely opening remark. May I ask the team two to come up on stage? Team Client Protection, Roshaneh, Zafar from the Kashf Foundation, and Gerhard, Coetzee from CGAP. And you don't have to answer the question right away. You can go ahead and make your opening statement, and then we'll go into, you can restate the question, and we'll go that way.
Good afternoon, everyone. How are you today? Yeah? Welcome to the grand debate. And we are going to begin with a story. So I want you to reflect on the reality in Sabina's life. Sabina is a vegetable vendor who has been earning enough for her two children, her 20-year-old daughter and her 17-year-old son. Now, her daughter is single, and there's a lot of social stigma attached to that. The fact that she's not married and she's single requires her to find a suitable match. Not only that, requires a dowry and other financial expenses. Her son helps her, 17-year-old son helps her now and then in the business, but he's studying, training to be a car mechanic. And he travels far distances, and he's been pestering her. He's been on her case to get him a motorbike. Not only that, she has been suffering from gallbladder stones for a long time, and she's been putting that expenditure aside. She wants to, she doesn't have the money right now to do that. And her business is growing, it has capital needs, and that's a legitimate need. And she also a legitimate need, and she needs to invest in buying more products in her vegetable stall. So the question is, Gerhard, I ask you, how is she going to cope?
Well, Sabina's situation is not uncommon. The majority of poor clients across the world are faced on a daily basis with conflicting objectives, putting stress on them and making it very difficult for them to actually make decisions within their really scarce bandwidth for decisions. It is as if you have to make a decision about being resilient and being able to take opportunity in the future. So that makes it very difficult, especially if these are conflicting decisions. Without mentorship and guidance, Sabina will succumb to the internal and external pressures, taking on multiple loans, taking it from many lending organizations, and then when things become tough, she's going to dip into her savings. She is going to take away her future and her assets to service these loans. And the problem is that not only will it stop there, as soon as she's covered a few areas, she may run into that health issue that then forces her to take another loan. So the question is, how would you handle this? Isn't there a moral dilemma that confronts microfinance providers in this area?
The moral dilemma is a recurring problem. It's a daily concern when microfinance entities fund the legitimate needs of their clients, but they know that the clients may make decisions that will shortchange their future benefits. It's like the case of diarrhea. You see a child with severe diarrhea, what are you going to do? Are you going to ask the parents, will you want oral rehydrated salts that are lemon flavored, orange flavored, or have no flavor? What are you going to do? Are you going to do that or treat the child for diarrhea? So the question is, what is the theory behind the practice, Gerhard?
Well, human aspirations does not stop at your income level. Poor people also have aspirations to be recognized, to be somebody in the community. Keeping up with the Joneses, or the Smiths, but not with the Coetzees, is a reality for low-income families. There is competition to win, even if it means disarray, if it means stress for you. So there's exceeding pressure to measure up to existing social norms and customs, and women often lack the agency or the fortitude to stand up to these norms. Without meaning to sound paternalistic, it is like writing on a pack of cigarettes, smoking is bad for your health. But Sabina obviously prioritized short-term needs, and she is busy doing it as we stand here across the world, which are equally compelling and competing with her long-term opportunities. So what is this thing that we are chatting about? What is client protection?
So as we see it, client protection is about ensuring the well-being and the dignity. This is a very big word. We need to stop and think for a moment. It's ensuring the dignity of clients. And we do know sometimes, as I mentioned earlier, clients will shortchange. They will trade off long-term benefits for short-term needs. And especially in this fast-growing digital space, where we have nano loans, what are we doing? We are pushing credit onto clients with limited choices. So the question I need to ask here, what does data tell us?
Well, we've done some research in Kenya and in Tanzania, and we know that between 30 to 50% of people that chose digital credit in Tanzania and Kenya are behind in their credit payments. And 17 to 34% of those that chose digital credit cannot repay. So the question is that what happens then? They get handed over because they've exercised their choice to credit bureaus for small amounts, sometimes rounding errors, 20 cents here, 20 cents there. And it cuts them out, it prevents them from taking credit ever again in the future for education, for health, for housing. We expect to see a similar trend in digital microinsurance, in digital pay-go lending, and we are extremely worried about that. In this context, it seems to me there's market failure. And what are the drivers here driving that?
So as we see it, the odds are heavily stacked against the poor. In a perfect world, when we will have, in a perfect world, we're
7
just wrapping
minutes.
up. Okay, just wrapping up.
No problem.
10 seconds. In a perfect world, we will, where market choices are open, we will end up in profiteering. So ladies and gentlemen, we rest our case here. Thank you.
Thank you. Thank you, Team Client Protection. I know Team Client Choice started off with a bit of a shorter statement, but you now get the opportunity to pose your question to Team Client Protection, and then we'll repeat it again, and I'll give you a few minutes more to respond.
So I would say, to rephrase the question and put a very fine point on it, one is, anytime we start banning products, we know what happens. It's not that the products go away, it's that they get provided by people who are even less interested in client welfare. So developing a regulatory framework that's going to push MFIs away from serving people does not mean that they're not going to pursue those products. It just means they're going to get them from somewhere else. So, given that you are making an argument for substituting your judgment for other people's judgment, name a regulator that you know.
Financial Sector Conduct Authority, South Africa.
Just a person, an actual regulator.
A person. Kathy Gibson.
Kathy Gibson. Okay, Gerhard, please tell me a major
But that's your
financial...
second question.
What's that?
You just asked your question.
I know, but I have extra time.
But I have 4 minutes to answer that.
Yeah, so let's get to the
Gerhard,
question.
which of the major financial decisions in your life would you trust Kathy to make for you?
All the financial decisions where I do not have the bandwidth to make it myself.
And just to add to what we're saying, we are not saying we are going to ban products. We are saying we are going to make them more attuned with the needs of the client. We have to listen to our clients. Throughout, what we've been saying is essentially put the client at the center of this debate. And there are situations with asymmetry of information, clients do not have access to full disclosure. Let's take the case of comparing data across different competitors. Many times we ourselves fall into the same trap where we are doing an I accept on applications without reading terms and conditions. And therefore, we feel that without the information access, it's very important that we protect clients from exploitation.
So it's okay for you to download these apps and accept the terms and conditions without
No, I'm
reading
saying
them?
it's not okay because we are pushing the clients.
You have apps on your phone, right?
No,
Just
but we
a
are
moment.
pushing the clients in
Right.
that direction.
I think it is time that I step in as a moderator. Thank you for your multiple questions, Tim.
still have time.
And we're doing very well in time. I think you should pose a question to Team Client Choice now.
Go right ahead.
So our neoliberal friends, what we are assuming, please join me in this.
Neoliberal and proud.
What we are assuming is that market forces will always come up with optimal solutions. But that's not reality. We know the poor lack voice. We know that poor are disempowered. We know women do not have access to financial services. In fact, if we look at Findex, women are being opted out of the financial inclusion ratios. They're going down. So how would you, in this entire framework of reality, let's do a reality check on this, create a level playing field, and please do not give me academic arguments.
So I'd like to jump in here. I think the main point here is what is our role, right? We recognize that the market is not fair and that some people are left out. But the point is our role is to help those people get up to speed so they can participate in the market like everybody else. It's our role to actually empower people to participate in the system. It's not our role to judge their decisions. It's not our role to preempt their decisions. It's not our role to tell them whether their choice is right or wrong. This is to the moderator, Daniel. There is no decision that is right or wrong. People base their decisions on what is good for them. There is no way any one of us would have any sense of the trade-offs that any individual family is making. We have to trust that these people know what is best for them. And therefore, we have to respect their choices. Our role is only to provide them the tools for them to make the right decisions. So this is our concern, is what is the role of regulation? The role of regulation is not to be paternalistic and set the limits of what people can do. The role of the regulator and of the provider is to enable people to make the right choices for themselves.
We are doing very well on time. This is going very quickly. I'll allow a second round of questions. Tim, I know you had some burning questions still to ask, so please.
So this issue of putting clients at the center is something that, in fact, is strange to hear coming from the opposition, because they want to not put clients at the center. They want to put regulators at the center to determine what is right for clients. We absolutely agree on the fact that markets are not necessarily fair. And what we disagree on is who is best capable of figuring out what is fair and what is right. And we want to put the clients at the center and let the clients choose, rather than having those of us who are on the outside, who have 400 apps on our phone whose terms and conditions we've never read, and benefit from them nonetheless, telling the poor people that, no, you don't get to make those choices for yourself. We know better than you do.
So what's your question?
You could just choose to respond and make your statement as
Okay,
a follow-up, or pose a question.
So I find it very difficult to answer this question, because there are certain implied assumptions that we've mentioned regulators many times. In
Yeah,
fact,
we
we've mentioned regulators once, and our opponents mentioned them 17 times. So now I'm beginning to worry, who are
Whose side are they on?
mostly sort of enthralled with regulators. But let's not knock the regulators. The reality of the world that we live in is that we have different parties to this equation. We have the customers, who should be in the center, and we have providers, and we have regulators. And our real worry is that customers do not have a voice in this setup, and therefore they should have a voice. At the same time, they are not allowed to make the choice, because we have business models that exploit choice and sell things to customers that are not good for them. And we'll come back to this point. So we are extremely worried about this wonderful world of choice that actually just bring hurt and fallout for customers. You want to add? We have time.
Thank you very much. I think it's a perfect opportunity for us to move to the next round. Yes, please go. So I'm going to read out, post a dilemma that you can follow along as I read it, and then I will ask the respective teams to respond to the dilemma. So you're a loan supervisor visiting a client. Yes, that's the right one. She runs a small food stand and would like a loan for $3,000 to upgrade her stand and buy supplies. She passed the income assessment and has been a good client so far. As always, she provides land as collateral. However, you also heard from a neighbor that her husband and eldest son are planning to migrate illegally to a wealthy country. Many in your village have been making this journey, paying smugglers a fee of about $3,000. And those who succeed get jobs and send money home, but many are turned back. Some even die on the way. So you're torn. The loan could be for migration, or it could be for the food stand. So what do? Can you trust the client to make the right decision? And what are your obligations as a loan supervisor? And I will let Team Client Protection go first this time.
So when I started my microfinance work, I worked as a loan officer for 2 years. So I understand the dilemma really, really well. And one of the things is that this, as far as being an economic migrant, is a real life story. This is a story that happens in many, many communities. However, on the other side, there's a huge risk attached to this. And the risk is, it's like game theory. if you look at it. If you cooperate, you succeed. But in this case, nobody wants to cooperate. So you will end up, the number of people that cross the border before you, your likelihood of going through is going to be much less. So from a microfinance perspective, I think what we are pushing them towards is exploitation, slavery. This is illegal smuggling of human beings for economic, obviously for economic needs. On the other hand, it could also lead to death. So I have a huge responsibility as a loan officer to take this issue up. This, ladies and gentlemen, is a case where it's a matter of life and death. So I really, really need to look at it from that perspective. On the other hand, there is a legitimate need that the microfinance client has, which is regarding their business. So the first thing I'll have to do is really understand the needs of that business. What is the potential in that business? Because I don't want to supersede the needs of my client's business over and above this concern. I'll have to balance this scale. And in that sense, what I'll have to do is do a credit appraisal, understand the business, perhaps give the money, definitely give the money, but give it in tranches, not give it upfront, not give immediate cash because money is fungible. Spend more time with this client, seeing how the business is doing and where the money is being spent. Not only that, I think I have a moral obligation because I'm part of that community to also make sure that I talk to the son and the husband of the client and see whether I can find economic opportunity for that particular household within that community. So for example, from a client protection perspective, I need to make sure that I either work on placement services for the son and the husband, or maybe in the future, when I can look at their skills and do an appraisal, also provide them loans if needed. So that would be our response on this.
Thank you, Roshaneh. And team client choice, what is your view of the situation? What do you do as a loan officer?
Absolutely. I just want to quickly start by saying, Roshaneh, the only thing missing is moving in with the family and helping them with making some other decisions. Okay, so I just want to start off, put some context here. I'm a loan supervisor. I have a lot of experience. I work for a very mission-driven organization. I'm excellent at my job. So just put that as context.
Of course.
So my organization exists solely because it cares about what's good for customers. We care about development outcomes. We are not here to make money, right? That is my purpose, is to serve customers. And because I'm very aware of the mission of my organization, there's no doubt in my mind that my full attention has to be on what is good for this household. And from my perspective, migration is a financial management tool. It is a tool like any other financial management tool. You can look at it as migration is an initial lump sum investment that I make into my family that gives me long-term returns in the form of remittances. The evidence shows that migration has a much more reliable return than any tiny little food stall that I might get involved in, or any other local
But there's
business.
huge risk.
What I'm trying to say here is there is risk in everything. There's risk in everything that we do. But the evidence shows that the return from migration, the remittances, are vastly more than the return that I can make from any small activity that I do locally. The evidence shows that the returns are 3 to 10 times more the initial investment that I make. There is no question
We
that
might as well start gambling. Sorry.
there is no
Actually,
question.
the expected return on gambling is actually much, much lower.
The house always
Okay,
wins.
let me, excuse me, moderator.
It is your time. We'll have to dock you for a minute.
Let me just point out that another point around evidence is that remittances are the only financial tool where there is direct links to poverty reduction. All of us know the Surrey and Jack paper. So, because I am a mission-driven individual who works for a mission-driven organization, it's my job to not only support the financial decision of this family, but I will also fight internally inside my organization to promote a migration product, because I believe migration is critical. In the world we live in today, with the kinds of risks and hazards that individuals face. So, but how would I think of any risk? Come on, I'm a financial institution. I know how to treat risk. I treat risk like any other risk. I provision for it, simply put. And I'm just going to go into my portfolio and I'm going to assess, well, how much default do I have due to migration? And I bet you, I would gamble here, and to find out that actually, probably my very high performance, my high repayment is probably due to the remittances that my customers receive. It's probably not due to their tiny little food stalls. So from my vantage point, from where I sit, there's no way I can understand the risk-reward analysis that this family is making to choose between investing in a food stall or to send the husband and the son abroad. It's not my job to second-guess what this family's decisions are. Given this family's historical performance, I must trust that they know what is best for themselves, and that they can make the right choices. This family has proven that it can repay its debts, hold on, sorry, a second. Yeah, this family has proven that it can repay its debts, and I just want to remind everybody that migration is by far the most important development tool we have in the world. Remittances account for much larger than ODA. They are increasingly more than even foreign direct investment. Excluding China, in 2018, remittances accounted for $462 billion globally, more than foreign direct investment in low and middle income countries, which was only $344 billion. So, as a supervisor, I would never shut off this critical flow of returns to this family.
Thank you. Thank you, Mayada. This is a good time to take a vote. Where do you think things stand? Are you with Team Client Choice? Or are you with Team Client Protection? Let's do a show of hands. Team Client Choice. Okay, okay. And Team Client Protection? I think it's about even.
No.
It's all on my perception. You know, my right eye is a little weak today. All right, let's move on. We have another dilemma, and let's see if that dilemma changes your views, and see which team wins. So, you are the head of supervision at the central bank. The central bank that's been mentioned many times, apparently. Overseeing a very competitive market. You recently commissioned research that shows clients with more than 3 loans have high rates of over-indebtedness. About 30 to 40% of them are over-indebted. But even among this group, most clients have no difficulty making repayments and have put those loans to good use. So for that 30, 40%, there's also the 60 to 70 who have no problems. And your staff has prepared a draft regulation prohibiting more than 3 loans per client. But by protecting those who become over-indebted, you realize that you'll also prevent many others from accessing the loans they need. So despite your best efforts, you can't distinguish between those 2 groups. All you know is about the 3 loans and the over-indebtedness risk that's related to them. So what should you do? Approve the new regulations, or do you leave it to clients and institutions to decide? And Team Client Choice, you get the first go.
So the way this dilemma is structured answers the question right off, right? The regulator cannot know the details that are most important in making the decision. And even what they think they know is almost certainly wrong. This study that has found that 3 loans is the cutoff, if you can figure out that 3 loans are the cutoff, but that more than half of the people with 3 loans are doing fine, your data is not useful for answering the question. So you're starting from a perspective of already we are looking at issuing a regulation that substitutes our judgment for the majority of the people who are doing fine. And even more than that, you have to assume that this data is going to change rapidly. So even if it's true now, how much is it going to change in the next year? How much is that threshold going to change? And of course, we have to take into account what's going to happen if you say this blanket regulation, no more than 3 loans. Does that mean the need amongst those 60 to 70% of people who are doing fine just magically disappears because you decided it was too dangerous? Of course not. We know what will happen. Those loans will continue to be made. They will be made on worse terms, more expensive, more exploitative than they already were. So by issuing this regulation, you're basing it on a bad premise, using bad data, and almost certainly making the situation worse for more people. And yet, you're going to sit there and decide that we know best. It really sort of beggars the imagination, sort of this process that otherwise seemingly intelligent people can walk through those steps and say, I've got bad data, I won't be able to update it, I still can't tell what the real issues are, and still I think I know better.
Thank you, Tim. I think it was a very long answer, much too long. Team client protection.
It is interesting that the client choice team started this day as discussion by telling us how flexible and how sort of wise regulators were in the old days of microfinance, where they allowed the market to develop, and suddenly they changed into these demons that doesn't know how to do their work, etc. Let's be fair about regulators. Obviously, if I'm the regulator, from our point of view, I would approve the new regulations, straight out. But implement it slowly and test the market. Educate the market as you go along, because regulators are not only there to be harsh. Regulators are there to help grow the market as well, especially in developing countries. In essence, I would also argue it should not be about how many loans, but the loan amount compared to the ability to repay should have been the play. So I would sort of work my way towards that as a wise regulator.
It's especially helpful when you change the question.
This is also an area where we need market monitoring, exactly what this regulator will do. And we need to build capacity of regulators to identify problems early on before it becomes a crisis and hurt many clients. Is that against client choice? No, not really. It is just a pragmatic and sensible approach by a wise regulator. Let us look at many situations. Let us look at many situations where choice was left to the market. And I can repeat names like Andhra Pradesh, like 2008 American started international crisis, fallout in Cambodia that we see now because everybody's got choice. And I know our learned, experienced audience will know about many more examples in this regard. Regulators can play a crucial role here. And one way of solving this dilemma is for them to ask the service providers to start reporting on customer outcomes. So I feel very comfortable to go this way, my learned friends.
Thank you, Gerhard. So the audience, what do you think of this dilemma? Which teams got the better answer for you? Would you go with Tim and client choice, or would you go with Gerhard and client protection? Who's with Tim this time? Okay, all right. And who's with Gerhard? I think Tim wins this time. All right.
I'm shocked.
Very good. So I hope you have been taking notes, you've been paying attention, and what dilemmas do you have in your mind? What would you like to pose to our esteemed panel that would make them think and make them respond from their philosophy? Yes, in the back there, in the middle.
And I just have one dilemma, and this is a real case scenario. And it's geared towards the digital aspect of things. Let's say I have a ATM card, a credit card, and I'm using this card to do transactions. And on this fateful day, I traveled out of the country, and I used my card in an ATM. And I got back to my country, and I noticed that $5,000 has been taken from my account. And in emerging markets, for example, in Africa, most of the time, you don't get his money back. So, for Team A and Team B, client choice, client protection, what would you do in this case?
Okay, thank you for that dilemma. I've noted it down. Any other suggestions? Yes, we have one up front.
Everyone's going to think it's a plant, though, because we work together.
No, but I don't know. I have no idea.
Well, Roshaneh mentioned gambling, and so it is on that subject. you know, if you're a digital provider, let's say in East Africa, and you have evidence that a lot of the digital loans are being used for gambling, let's say there are spikes in loans before and after Premier League games are scheduled, and you have anecdotal evidence that these clients are racking up consistent losses, and yet credit risk isn't an issue. The repayments are as they should be. It's being taken out of household liquidity. In other words, the wives and the children are the ones suffering. Gambling's legal, and all of the male clients, let's say, they are over age, right? So this is not a regulatory question. It's a moral and ethical question of what you as this digital provider have to do, confronted with convincing evidence that the loans you are given are destroying families.
Okay.
Thanks.
Thank you. Any other dilemmas? Yes, one more, please.
Thank you.
So while, okay, please go ahead.
Yes. So I have a more, let's say, difficult. I mean, dilemma is difficult, anyways. But why those regulators, the client choice and client protection, are speaking about each other as an opposing, generally, because at the end of the day, what we all have to do is to care about our customer and about the industry itself. So for me, the biggest dilemma would be that both sides consider themselves as one side and not two separate sides. Because in the end of the day, we have one big goal, which is to take care of our environment and of the customer. So that will solve a lot of problems and make our lives easier, all of our lives easier.
So I take your point. I think you're moving towards consensus. We're trying to keep the debate, right? So I appreciate it. Let me take the first dilemma on the credit card. The problem is if it's the institution actually cheating the client, I think that's clear. No one's going to say cheating should be allowed. So let me maybe reframe it a little bit and make it a little bit more difficult. Let's say for the sake of argument that you have a credit card that in its terms of terms of use actually puts fees of 20% that they'll deduct for foreign transactions. So when you're traveling, and they tell you ahead of time when you take the credit card that that's what will be there. The print may be not too big, but it's there, and you signed. So maybe I'll change it to that. Does that sound okay? Does that sound okay? And I think last time we started with client choice. So now client protection. How would you view that credit card dilemma? If you have a credit card company, it issues a credit card and charges genuinely high fees for foreign transactions.
Well, I would start by saying that the kind of clients that I'm worried about actually will not have that problem. So now I have to think about the clients that I'm not worried about.
It's the audience here
having that problem. The answer to your first question was, don't worry, Visa and MasterCard should guarantee that because you've done it in a different country. And the answer to the second question is, well, the protection that you have for paying higher fees and the convenience you have for being able to withdraw money in other countries should be a good way to justify the higher fee. I mean, from a business model side. From a customer side, you have, I have 5 minutes left?
No, it's okay. We started late, so thank you.
Okay, well, it was just a joke. But from a customer side, I think it is a situation where it is not a question about choice, or it's not a question about protection, because inherently, in terms of the way the card system is set up, the protection is already there.
Okay.
And I mean, just to add to that, it's also about what information is shared.
Yeah.
So when we look at client protection, it's also the availability, the relevance, the ability to understand and relate to the terms. So I think that is also very important in this case. And I would agree with you, Gerhard, that this is really not the client segment we are worried about. When we go to our segment, this is not the debate we are having. They lack complete information. They don't really have adequate knowledge of how to trade on the basis of information. So from our perspective, I think if you're willing to have the the service and access to credit card services in foreign transactions, I think that is the benefit that you're seeking, and you have to pay for it. But from our segment, I think that is a major concern in terms of disclosure.
Thank you, Roshaneh.
You guys are kind of arguing our
I
side.
was going to say,
I'm very confused.
we rest our case.
Yes, the service should be available to those who have the desire to use it. That's our point. Our point is, what is the role of the regulator or anyone else who is concerned about the market and the protection of individuals? And the role is to make sure that there's information so that people are able to judge the differences between the options that they have. Our role is to make sure that people have the capacity to understand what they're checking and signing onto, but we should not be taking that product away from that customer. There might be a situation, a life-threatening situation, or some other situation where access to that one credit card might actually be the thing that is the most important thing in that person's life. And we don't think it's our role to take that option, take that choice away from them. So it's about doing everything else to make sure that that customer is making the best choice that they can for the circumstances that they're in.
While they're being protected by the scheme rules.
Well, thank you. Let us, instead of voting on this issue, which I'm sure you have strong opinions on, but I think we should go ahead and move. And I know it'd be nice to address gambling, but we are now starting to run a bit short in time. I think we should go to the closing statements and give each team their last chance to convince you, and then we'll see where you stand as an audience. So I think this time, Team Client Protection. Please go ahead.
Okay, so we have listened to the argument by our esteemed colleagues on the other side of the divide. We have listened that choice is important. It is the fair approach. It is the approach that makes us feel better, not the client, us. Our colleagues have argued that choice is fair. However, in a world where choice is misused to entice poor people with low bandwidth for crucial decisions into solutions that add no value, only for the provider, is choice the way to go? Roshaneh?
No, I mean, even in the best of circumstances, we are not exercising full choice. We gave the example while we were debating on how many apps do we check I accept. Is that really a choice? It's a binary to having no choice. So why? Does it make us feel good that we are pushing the poor towards choice where they really have no choice? No, we don't want to do that. When we talk about protection, we talk about creating value. We talk about dignity. And that is really what we're all striving for. We are striving for value and benefit to the client.
I mean, we can go on and give you another example of what choice is in the world of today. In this world, where choice is used as the driving edge of the business models that we see across the world. And these business models are vehemently defended for choice through lobbying and bribing to defend the rules of those business models. Our result, and we can, one result, and we can mention several other examples, is, for example, sugar. Type 2 diabetes is on the increase across the world. And according to the World Health Organization, it has a lot to do with overconsumption. So some countries are bringing in a tax, but the choice people would say, no tax, let them die. The point is the concept of market externalities that add more social costs than benefits provide the opportunity for us to engage. And we have to think about this carefully. We can go on and on with examples. Another example that we've seen at this conference is climate change. So let us just do what we want to do, because the climate and the environment and the impact it has on the most vulnerable, our clients, the poor people, doesn't matter. Let's give choice the answer. So let's go on.
So let's come back to the world of financial inclusion. And thank you, Sam, for raising the point of gambling. Recent research told us that nano loans that are originated at midnight are used for gambling. So should we just turn a blind eye to that? Or should we set up ethical principles and help families measure and handle the consequences? So ladies and gentlemen, we turn it over to you. The decision to protect the client, the onus of that lies on you. Thank you.
Thank you, Roshaneh. Thank you, Gerhard.
I'm listening to 30 seconds. before continuing the review.
We're not done yet. We're not done yet.
Give me 30 seconds. Yep.
Okay, we'll start.
So Mayada is going to finish off, but I want all of you to think about, as Mayada is talking about, what you just heard, which is they can't really provide examples from the financial inclusion space, and they have to appeal to climate change and, excuse me, this is my turn. They have to appeal to extreme examples like climate change and diabetes and gambling, which, yes, is a problem in some places, but it's not what we're really talking about. We're talking about very small things in comparison to much bigger philosophical questions about what is the role and the dignity and the freedom of individuals. Mayada?
Yes. So when we started this debate, Tim made the case that our industry has actually failed to make better choices for people, and we should leave these choices in their own hands. So I'm going to actually argue that this is not just an issue for our industry, that this is the entire premise of the development field, not just financial inclusion. Development is actually about increasing the number of choices people have and empowering them to make the choices that are relevant for them. It's not about judging the choices that people make. The concept of choice is essentially the only way we can actually measure whether development is working. By increasing choices, we are expanding people's freedoms, and we're supporting human progress. You may have heard of this argument before. I'm not the one who invented it. This is, if you've heard of it, you've been paying attention to one of the most renowned thinkers of our time, which is Sen, Amartya Sen. He won a Nobel Prize for this philosophy. In many ways, he was way ahead of us. He called this thinking and this philosophy the capability approach. This approach cares about people's real freedoms to do the things that they value. They set their value system, not adopt our value system. Their well-being is thus the sum outcome of all the choices they make in their lives. If we limit the choices that they have, we are essentially limiting the well-being potential of these people. This means that development is ultimately about expanding the choice sets open to people, not about judging them, not about judging the choices that they make. And I'm going to use an example to make this point. So let's imagine you have two people. One person is a farmer in Zimbabwe. He's worked very hard. He sells his crops, and he decides not to buy additional fertilizer, not to buy additional seed. He decides instead to send money through mobile payment, a mobile wallet, to his son in Harare, who's using it for living expenses. Now there's another story. There's another person, a seamstress in Sao Paulo, and her husband has just made some money on a construction site. He then sends her the money using mobile money, and she decides to use it to purchase a sewing machine. Which of these choices is better? Can you make that judgment? Most of us would argue that the investment in the business is using our value system is the right choice. But perhaps this business has no competition, has extreme competition, and that the business is not viable in the long run. Perhaps there's a flood of cheap clothes coming in from China, and this business is going to go under. Is that a good choice for the seamstress? Now the farmer, he made a choice to send money to his son. For us, that looks like a living expense. But in reality, this is an investment. From his perspective, he's making an investment in his long-term retirement. He's making an investment in his son, who's going to then take care of the family when this person is older. None of us have the ability to see into the future. No matter how many diaries projects we've done, we do not fully understand the trade-offs that families are making. We do not have the right to judge people's choices. We can only do two things. As development practitioners, as regulators, as whoever we decide to be, we have the ability to increase the choice sets that people have, and we have to make sure that people have the right tools so that they're making their own choices themselves. Thank you.
Thank you. Thank you, Mayada. Thank you, Tim. Final vote. After hearing an hour of debate, where do you stand now? Are you with team choice? Team choice? How many are with team choice? Okay, all right. And team client protection?
Oh,
I
that
actually
clear,
think
no, that's clearly not.
this is a tie. This is more or less a tie, and I'm being genuine here. I'm not making it up. So thank you very much. I hope it was informative. It's not the votes that matter, but Gerhard, Roshaneh, Mayada, Tim, thank you. Wonderful.
We enjoyed it.
It was great.
Yeah, great. Thank you. Thank you. Thank you.
Well debated, sir.
Thank you,
Well
Roshaneh. It was wonderful.
Thanks, that was fun.
That was great. Thank you. All right.